Good morning and welcome to today's Five with Fitz. I'm Keith Fitz-Gerald. Thanks as always for joining me. You know, like many people, I awoke to news that Israel and Iran are at it. Airstrikes have apparently killed Hossein Salami, the commander-in-chief of Iran's Islamic Revolutionary Guard Corps, and taken out locations that Israel says were related to Iran's nuclear program, as well as its ballistic missile program. Now, two of Iran's leading nuclear scientists were also reportedly targeted and killed. Now, Iran, of course, retaliated, sending something on the order of 100 drones towards Israel. Now, my expectation is that this could get considerably more serious in very short order. Now, very predictably, the Dow is down 600 points as I record this. Oil prices have spiked, the US dollar has rallied, and airlines are diverting flights, and the immediate airspace is now closed in the Middle East. World leaders, thankfully, are calling for restraint, which makes plenty of sense given the potential for far wider conflict and the incredible instability that is long a part of that region. Even China recognizes the urgency, with the Ministry of Affairs offering to help with the de-escalation efforts. That's a good sign. So, what does this mean for your money? That's the question, right? It's a logical question, and you're not alone if you're wondering. First, I constantly urge you to keep things in perspective, and this is one of those times when doing so is critically important. What happens over one day, over a month, over a decade? When in doubt, zoom out. There's a chart I want you to look at in the written version of today's 5-Leaf Fits. Take a look at it. Put it on your mirror if you have to. The thing I want you to internalize is that a sharp sell-off like the one we're seeing today is both normal and, believe it or not, exactly what you want to see because it instantly resets risk. Why does that happen? Well, panicked selling shakes out the weak hands and it often clears the deck for stronger moves ahead. That's not instinctive. In fact, it's counterintuitive. Now, my point is that it's not comfortable, but it is constructive. Knee-jerk moves often pave the way for smarter money to step in and for more rational pricing to take hold. Now, the pros know this, and now you do too. Now, we've seen this movie before. That too is important. Think back to the market shocks following Russia's invasion of Ukraine, the U.S. drone strike on Soleimani, or even the Gulf War in the 90s. Each time, the markets have dropped hard and then rebounded just as fast once the initial panic passed. Now, what you want to focus on as an investor is that fear tends to create spectacular entry points for those who could stay calm long enough to view them in the rearview mirror while others lose their mojo. Again, I'm not making light of this. I know it's not easy. But what you want to focus on is that history shows very clearly that's where the real money gets made. Now, second, the fact that the markets haven't collapsed is a sign that things are working normally. The fall we're seeing this morning is well within the range of acceptable volatility and order flow. It's easy to focus on the selling because it's visceral and loud and it makes headlines. But the real news and what you want to focus on as an investor with long-term wealth building in mind, is that every seller still has a buyer today. Now, you've heard me talk about this many times, and now is a time to take that lesson to heart. Panic always meets discipline, and fear always meets conviction. And yes, orders are still being matched up. Third, there is no doubt things could get worse. We got to be real about what's happening. That's part of your job as an investor. If this conflict remains relatively constrained, meaning regional players only and minimal spillover, there's a good chance that the markets are going to bounce back quickly, just like they have in other geopolitical shocks. But the real danger lies in a missile hitting the wrong target on the wrong line on a map, and the sympathetic actor taking up the charge from thousands of miles away. That's when we move from contained to contagion, and the calculus changes fast. So now for the billion-dollar question, right? Or the trillion-dollar question, or maybe even the $1,000 question. It doesn't matter what your frame of reference is. This is the same. There are three things to do right now if you're worried. Number one, first, take a deep breath and spend a few moments thinking about how you and I can make the world a better place. I know that sounds trite, but prayers, if you got them on offer, good thoughts if you don't. Investing in optimism, and in this case, mentally, deliberately putting yourself in that frame of mind, is the purest path to profits and results in peace. Now, I know that sounds trite, I get it, but human history is filled with countless of examples of how we band together at very dark moments to make those things pass. Second, now is the time to make sure you've got all the names you want to own in your portfolio if things get worse. I constantly emphasize buy the best, ignore the rest for a very specific reason. The selling could accelerate at any time, and the last thing you want to do is find out that something you own is a POS. And yep, that stands for a term I won't say here. Third, get your buy list ready. I know I sound like a broken record, but here's why you want to do that. Be sure that every stock you own with a dividend is set to reinvest if you can do without the cash. Reinvesting in your buy list is one of the most important, powerful compounding forces in the investing world, especially when volatility gives you better prices. Now think about it like buying on sale automatically. Having your buy list prepped ahead of time now means that you won't hesitate when the opportunity knocks and those around you cower in fear. Dividend reinvestment also ensures that every dollar you've already got in the game keeps working even when others are sitting on the sidelines. Now, let me bring this up because I'm often asked about hedging whenever the you-know-what hits the fan. Most folks, frankly, misunderstand the concept. They think hedging is some kind of magic bullet that protects against losses. It's not. Professional investors don't tend to hedge to avoid losses. They hedge to stay in the game. If they can avoid losses or dampen volatility as well, that's a bonus point. That's victory. Remember that our goal as investors is longevity and stability, not perfection. Proper hedging helps manage risk and, more importantly, keeps your profit potential intact. Let me repeat that. If you're hedging properly, it's about managing risk, not avoiding it, and more importantly, keeping your profit potential intact. Now, if you're a trader, get to it. Don't waste any time because volatility is your playground, and it should be. But by the way, if you're a member of the OBA family and you're hearing about this or you've just joined the OBA family, now might be a good time to reread or read your 5-minute hedging guide, which is included as part of your membership, and it's available in the portal. So if you're not an OBAer and this is of interest, I've made a copy available, and you can buy that separately using a link you click in the written version of today's 5 with Fitz. Anyway, either way, no matter how you think about this, no matter where you come down on it, I urge you to take a deep breath. Buying great companies is already an implied hedge in and of itself. At the end of the day, this stuff is scary, and I get it. But keeping your wits about you when others are worried about losing theirs isn't easy. But it is how we build wealth. We don't move forward by pretending it's not hard. We move forward, we build wealth because we know it is, and we do it anyway. Today's bottom line, people think you make your money in bull markets, but let me tell you something. The real profits get made when the bears come out to play. No matter why, but they always get made when there's bear tracks around you. Remember, missing opportunity is always more expensive than trying to avoid risks you can't control. You got this, I promise. Let's make it a great day, finish the week strong, and do whatever we can to help however we can. I'll be traveling much of next week, so let's plan on being in touch via X, formerly Twitter, and YouTube, where I'll post a few thoughts from the road. See you next time. Thanks for watching.